It's Tuesday, May 5th. I'm David Song, currency analyst with Daily FX, here for a DoD session wrap-up. So we're seeing the U.S. dollar largely struggle to hold its ground, even though we did see the U.S. ISM non-manufacturing survey come in a bit stronger than expected. And even when we looked at the breakdown, did see the employment component actually expand for the third consecutive month, so could fare well for certainly non-farm payrolls expectations. Currently sitting at 230K, so we'll see how that will continue to shift around going into the key event risk. But of course, we still have some Fed officials to watch on the wires. But beyond that, we're keeping a very close eye on the commodity blocks, some divergences in terms of price action. But of course, a lot of meaningful developments, especially out of the Reserve Bank of Australia last night. We still have some more key data prints to watch out of the region there. So retail sales tonight, but the big one, employment report up tomorrow night, so we'll watch that. But even out of New Zealand, we'll be keeping a very close eye on that regional employment report. We'll watch those wage growth figures, given some of the dovishness coming out of the RBNZ as well. But just to dig into price action here, we'll start off again with just the U.S. dollar index here. Dollar, again, maybe a sort of a bearish outside day here, despite some of the mixed data prints from earlier this morning. But as long as that bearish momentum remains in play, I think downside risk remains here. And I think we're just seeing a function of, again, near-term resistance coming in right around 11,901. So may see a continuation of this series of lower highs, lower lows, as long as that bearish momentum remains in place. So we'll continue to watch the economic docket here, watch those key speeches from Fed officials. We'll see if that will give us a little bit more color. But again, still a little bit concerned. Might get some further sideways chop here going into, again, non-farm payrolls due up on Friday. But again, with the RBA, we did get that rate cut, but nevertheless, we're seeing some resilience in the Aussie today, as it looks as though the Aussie the RBA could be approaching the end of their easing cycle. So we did see the central bank remove that language, no longer keeping that door open for further reduction in the cash rate. So we'll see how that language will materialize, how that will evolve over the near to medium term. But for now, looks as though maybe a similar tone to the Fed, where RBA is anticipating a faster rate of growth down the road here, but still retaining the verbal intervention on the Aussie. So with that said, we'll be mindful of some of the topside targets to watch from here. We'll see if we get a move back above 79, 47, 950 zone. May see another run at, again, key former support zones, 80 handle into 80, 20 zone. But again, looks as though RBA will watch this near-term dynamic. Seems as though they're a little bit more upbeat on the economy, but we'll see whether or not, in fact, a key risk to watch for the Aussie is, will we see them toughen up the verbal intervention, given some of the resilience in the Aussie dollar exchange rate? But with the New Zealand dollar, again, coming off the lows here, but with the break, the failure to retain the bullish trend, again, from those March lows here, looks like we'll see a continuation of the long-term bearish trend. We got a break of the bullish momentum here. So again, the risk remains tilted to the downside from where we stand. So right now we'll watch 75.60, 75.90, 76 handle may come in as new resistance here. We'll favor the downside targets. But again, watch the employment report tonight. We're looking for a slower pace of growth in employment, but watch the wage growth figures. Looks like we're looking for a meaningful pickup there. We'll let the data speak on its own. But after we've gone through these pairs, watch Aussie Key back up at some near-term resistance zones here. We'll watch those March highs from here. We'll see if we get a nice kick above 105.30 zone, close above that region for that conviction that we may see a large correction on our hands. Double top formation still in play. Double bottom formation still in play. And we'll watch that RSI, see if we get a kick into oversold territory, move above 70 here for that conviction that we'll continue to see a further advance in the exchange rate. But dollar CAD, we're seeing a lot of resilience in the Canadian dollar here, despite the record trade deficit posted in Canada. But nevertheless, it seems as though the oil story is really helping out the Canadian dollar here, keeping some of the resilience there. So from here, we'll watch the lows that we set back in late April, coming in right around that 119.60 zone, below that 119.10. So watch that key region to the downside. But with that said, we'll watch a string of lower highs. Again, maybe at a risk for a lower low as long as that bearish momentum here remains in play. Just a quick look at oil, still doing its own thing. And again, watch those headlines coming out of Saudi Arabia. Seems as though those are going to be some key themes to watch. But as long as that bullish trend in price is there, we'll keep a very close eye on the RSI. I guess we could still argue a bit of divergence there as that oscillator struggles to kick back above 70 zone. But similar story with the UK oil, right? Watch that RSI. Still retains the bullish trend, but largely struggling to push back above 70, even as we're making some fresh highs in price. But again, it looks as though dollar weakness will persist here. Euro dollar, as a result, may see another close above 111.20 zone, may continue to look at 113 to the top side. So looks like we may face some sideways price action despite, again, Greece. The The finance minister there showing very little confidence that we'll see some sort of accord happen at the May 11th meeting. So some headline event risk to the Greek situation there, but as long as we retain the bullish momentum, dollar remains at a risk for further correction to the downside. Pound dollar also, meaningful bounce off of the lows after we set following some of the dismal data out of the UK, but for now, dollar weakness just seems to be the main culprit here. Really big theme across the board, so we'll continue on with that. And even with dollar yen here, looks like we're trying to break out of this triangle formation. I don't expect anything meaningful from here. I don't expect some fresh highs. More than anything, I think we're just at a risk of facing some further sideways price action here. Just be mindful of near-term resistance coming in around 120.55 zone. We'll see whether or not we'll continue to see these failed attempts to close above that region. But for now, just be mindful of the bigger trends here. Gold, I remain bearish on this long term, but right now, maybe at a risk for some range bound price action. So from here, watch some targets to watch topside 1110 into 1118 zone, right? Given the failed closes above there, but silver also just coming into right in resistance. Nice key juncture here, along with trendline resistance. We'll see if we could hold some of the highs there as we retain the bearish momentum. So again, long-term picture remain bearish, but we'll just wrap up with equities here. Sort of bearish stay here. We'll be mindful of that. And again, looks as though we still have the correction going on with the Nikkei 225, even with the DAX here. But some cross to watch, guys, as we head into some of the key event risks, some of the now that we've gone through some of the key dynamics, Euro Aussie looks as though we'll get a continuation of the bearish trend here long term. So again, looks as though we'll preserve some of the bearish momentum indicators. And again, right now, it looks as though we may have set a near-term top opening up May. With that said here, may want to resume and look back to the approach of looking for opportunity sell dips here. Again, I'm still going to wait till we get through the first full week of May. But for now, even watch some of the pound pairs right now with where we are. I think pound CAD, we're just sitting at a key juncture, given some of the resilience in the Canadian dollar here. So we'll see if we get a further break to the downside, maybe bring up 786 retracement. We'll see if we get a better move into that region, maybe even a break of that, given some of the resilience in CAD. But again, watch some of the long-term trends that have remained in place. So I think we're just sitting at a key juncture for some of these pairs. But even with Euro Yen here, we're still holding some of the highs here. We'll see if we get another run into that 135.30 zone. But for now, just be mindful of the R side, struggling to hold in overbought. We'll wait for the break of the bullish momentum here, for that conviction that we're ready to resume to the downside. But again, we'll just watch. Be mindful of current market conditions, some of the key themes that remain in play here. And I still think dollar remains at a risk for a large correction as the dollar index still starting to break back above that 11,901 resistance zone. So be mindful of that. Again, we still have some key data prints, event risks to watch. So again, New Zealand will watch the employment report, Australia's employment report up tomorrow. And of course, watch some of the headlines coming out of the Federal Reserve. We'll continue to put the pieces together here going into NFPs. But with that said, guys, best of luck on all your trades. And I'll see you tomorrow morning, same time, same place.